What's the deal, y'all? Happy Monday.
Happy Monday.
It is Easter Monday. Shout out to all my West Indians who had the day off from school. Easter Monday is a real thing.
For sure.
Shout out to everybody and happy post-resurrection Sunday for those of Christian faith. Hosanna in the highest praise. And we back, man. It's Monday. And I mean,
a lot is going on.
I feel like every day something's going on, man. This weekend didn't feel too crazy in terms of the stuff that the president had announced, but leave it to Monday morning for him to go crazy on the Fed chair. So
yeah,
we got a lot to talk about, man. How was your
Rashad,
weekend?
Great, Rashad. We may need your monologue can back because
so it's ready. It's ready whenever needed.
Rashad has a theory, and listen, Oscar-winning analysis for real.
I got the red button ready.
Fact though. A lot to talk about today for sure. This Thursday, we have EYL episode 6 o'clock. Paul Espinoza, great entrepreneur, is actually at InvestFest last year. And we're going to talk about systems. Very important.
That's incredibly important.
Very, very important for all your entrepreneurs out there. Wednesday, we back for Blackout. Sure, we'll have a lot of spicy topics per usual. Shout out to everybody that's been tapping in the Blackout. Appreciate y'all.
Yeah, shout out to Angela Rye. That last week was dope.
Shout out to Angela.
Yeah.
And Tuesday, tomorrow, do remember Detroit, Michigan.
Hey.
There's 20 tickets left. So we got our book tour. We got a book stop tomorrow, Tuesday, in Detroit, Michigan. You can go to youdeservetoberich.book.com to get your ticket. The price is like $40. That comes with a book.
Yep.
So you pay and you get an autographed copy of a book. We're gonna have fireside chat. We're gonna have,
what's up, man?
Yeah. What's the deal?
It's been a minute, man, since we got a cameo.
What's the deal? So yeah, that's tomorrow, and then New Haven, Connecticut, May 3rd. You can also get the tickets from youdeservetoberich.book.com. So Detroit, Michigan tomorrow, New Haven, Connecticut, May 3rd, and then Thursday we'll be in Richmond, Virginia.
Yep.
For the Big Dipper Summit. You can go to bigdippersummit.com to get your tickets for that. bigdippersummit.com. This Thursday, we will be in Richmond, Virginia.
I thought you were gonna say in this weekend. Yo, shout out to
booked and busy.
Shout out to everybody that is celebrating their birthday. It is our brother Terrence J's birthday. Shout out to Terrence.
Happy birthday, Terrence.
Terrence, a good dude. 82 babies are in the house. More life, more blessings, my brother. Just a solid dude since the day we've met him and really built a brotherhood with him. So shout out to him, and hopefully he's enjoyed his birthday today.
Yeah.
With his lovely fiance.
Shout out to Terrence.
Shout out to P. P's birthday was a couple of weeks ago. We didn't give him a shout out. Shout out to P. Shanae, happy birthday. Zayd, happy birthday. Her birthday was yesterday, 420. Yes. Everybody that participated in 420 or did the noble thing and said we're gonna give them.
We're gonna wait.
We're gonna chill.
Yeah, we're gonna chill on Easter. Yeah. Happy belated to Corey too. Corey's birthday was last week.
Happy birthday, man. Is it now Taurus season officially?
I think so.
Is that what this is? Okay. I know what that means.
Oh, Taurus is stubborn, yo.
I know what that means. Yeah, I know what that means. Yeah, okay. Gotta get myself together. Okay, got you.
Yeah.
All right.
This Wednesday's before Blackout, 7 p.m. we will have our Red Panda Stock Club call. I love y'all. Shout out to my family. If I made you money, please put yes in chat. I thought NVIDIA was never going to go down again. If you want to know where to get in, where to get out, how to profit from the market, to know when the market is going to drop before the rest of the world does, go to ianinvest.com. Shout out to my guy, Ernest, and the Warriors organization. I appreciate the hospitality last night. Shout out to Draymond, GP. Kaminga, hold your hair. Maybe we'll talk about it on Blackout.
What's going on with him? Okay,
he didn't renew.
Coaching's decision. Okay.
Yeah.
Got you.
Disclaimer.
Yeah.
Rashad, thank you.
Yeah. Damn.
Shout Steph.
Yeah. You know what, Ian? Shout out to you. Before we do that, shout out to you. One of my coworkers hit me and He's like, I got my price alert for NVIDIA set at 89.
Hey,
I heard what the master investor said.
Let's go.
So shout out to you, and yeah, shout out to Red Panda, shout out to EYLU, everybody that pulled up on us at for our class Thursday, which was dope. Shout out to Steph, who was going over technicals, who was just incredible with that. So yeah, shout out to everybody that listened, learned, and took advantage. But y'all know how this works, man. This is our disclaimer. Do your own research. Our content is intended to be used and must be used for informational purposes only. It is very important to do your own analysis before making any investment based on your own personal circumstances. You should take independent financial advice from a professional in connection with, or independently research and verify any information that you find on our show and wish to rely upon, whether for the purpose of making an investment decision or otherwise. You know how this works. Continue to do the research, share the research when it's great. Show love to the person you got it from. Let's make some money. Let's build community. Let's pour out some love, y'all. Let's do this.
Shout out to Steve Kerr. That keep relationships intact.
Shout out to Jimmy Buckets, man.
For sure.
A real legend.
So we got a lot to talk about today. We do have a special guest that will be joining us later on in the show, Steve Eisman.
A legend.
He was actually played by Pete Carell.
Steve
Carell in the movie Big Short.
Oh, okay.
So he's one of the people that actually predicted the housing crisis of 2008. Made a movie about him.
Steve is from our area, man.
So
really? Okay.
We're gonna be bringing him on in a little bit, but before we start that, AMD.
Yeah.
Is it time to sell AMD?
AMD has historically been one of my favorite companies of all time, and before I was an NVIDIA fanboy, AMD probably led that position. But I think it's time to have a conversation if it's time to cut loose, and I think yes. If AMD gets to $53.16, I would then want to reposition in. But when I'm looking at an investment, of course, I'm always looking at to build, like you said, build a table, right? So who are the four in that space? And if we're going to be honest, AMD is not on the Mount Rushmore of chip makers anymore. They have some considerable competition. I'm not sure. You said what?
Who's the Mount Rushmore? That's like the thing now. Who's the Mount Rushmore?
NVIDIA, TSM, ASML. Shit,
Broadcom?
For sure. Qualcomm.
Okay.
Yeah.
No. So, oh, you said Qualcomm. I said Broadcom.
Oh, Broadcom. Them too. Qualcomm better too, if we're going to be real.
All right, cool. That's fair.
AMD is entering, I don't want to say it, but Intel-ish like territory of a bear drop. So if I look, they've had 7 negative months.
Yeah.
In the stock. So at this point, unless you're getting it at a historic low, because now, given the climate that we're in with the policies, tariffs, Trump versus Powell, the thing that is great about it is that we are entering generational buying opportunities, but I don't think we've gotten there yet. So 55.16 is one level that I do like it. If it ever got to $25.82, I would probably put a considerable amount of money there, mid 6 figures probably. But as of right now, I would not leg into AMD until the market and global economy turns around.
Well, I guess I gotta appreciate that you didn't say they were dead. I appreciate it. We'll take that.
No, of course not. No, not dead. Just injured.
Yeah, this is bearish territory over the past 12 months. And I'll lead with this. NVIDIA, before I had 1,000 shares in NVIDIA, AMD was the company that was my 1,000 shares. I sold some probably when I think we got down to like 113.
Smart move.
Which was all right. Well, let's take profit. My buy-in for everybody was $75, and we're approaching 75 here. And it's interesting you said the $55 range, which is crazy because if you go out on the 5-year chart and you look at the trend line, it makes a lot of sense why you said that.
Yeah.
But yeah, it's below all of our EMAs that we talk about on Market Mondays, whether it's the 50-day, whether it's the 100-day, 200. On the yearly, the 400-day moving average was 78, 76, and so we're like floating right above, 113, I'm sorry, on the 1 year. On the 5-year chart, check this out. The 400 EMA is 78, 76. And so we're talking back to 2021. And if you look at that chart, you could be saying, all right, there's some room for optimism, right? In 2021, when it hit this low level, or it touched that 400 EMA. We saw it bounce up, and then we saw it pull back in 2022. And so now we watched what happened in 2024 and that drop now, and we're about to hit the 400-day again. Is there an uptrend? Well,
no.
I would feel confident about it if there wasn't so much uncertainty around semiconductors, and especially what the president is doing. I guess the only bright news, and we kind of talked about a little bit, is when we're talking about America First in terms of chips. They're the first company to step up and saying, like, we're going to be the first ones to make our GPUs solely here in the United States. I don't know what that's going to mean, and especially when the GPU market, I mean, it's going to be dominated by NVIDIA for the next 5 years. They will be number two. And we kind of like talked about price points a little before we came on camera. That will be, to me, the only way that they can break ground in that race for GPUs is to have a price point that's affordable, that makes sense to small cap to new business startups in terms of GPU compute. So I still have the shares. I still have some calls out to 2027 on them. So we'll see what happens in the next few months in terms of the uncertainty with the semis. I know there's supposed to be a tariff coming on them. But yeah, if I'm doing it today, I like the level you said. 78 would be a level that it's all right. Well, you know what? If I haven't invested in it before, this might be a good opportunity. But yeah. I can't see it going down to 25 for sure. But if we get lower than 75, then we're dropping down to the 60s for sure. So
Rashad, you want to go to your theory about you had to take it a year
about pricing?
What?
Let's go there. Yeah, let's go there.
Well, let's see if he wants to, because he may not the same way you checked me on my Warriors point. Good job.
Well, it's one of these things. Before we go to AMD, AMD's down 55%.
Yep. So it's bearish.
It's beyond bearish. That's polar bearish. Yeah. But also this goes back
Kodiak for real.
This goes back to the theory of individual stocks are very risky. Mm-hmm. It's not a good idea to invest in individual stocks. Even Ian, when he says like 2 techs to index, it's only 2 stocks. It's extremely dangerous to invest in individual stocks, because even if like Facebook, we've seen 2 stocks go up and come down historically. Facebook back to damn near back to its 52-week low if it's continued this trend for another week. Tesla, we saw that skyrocket. Yeah. So it's like even a good company, you never know, economic environment, political environment. It's safer to invest in an index fund or ETF. It's just you're playing a very dangerous game when you're putting money in the individual stocks, especially substantial amount of money. Yeah, that's dangerous. And AMD is a company that, it's down damn near 60%. That's dangerous, right? Like if you have a lot of money in there, or if you're trading, because if you're trading, you're going to lose more. So I think that this highlights that if you want the chips, SMH is not down as much as that, right? Like it's just a safer way to go about it. And the number one rule is safety first. Like you gotta play defense. You always gotta play defense. So we'll see what happens with AMD. But it's dangerous times right now that we're in.
And the operating margin is 7%.
Which that's tough.
Abysmal for this space.
Yeah, it's tough when you compare it to NVIDIA, which is the other competitor inside the GPU space, and their operating margin is 55%. That's tough. But even inside the SMH, and again, shout out to everybody who's in the class, we broke down those legs, that table that you're going to stand on. So you look at, I mean, even in 2020, when we looked at SMH and its holdings, AMD was like number 1. Sometimes it was 2.
Yeah.
It currently sits in the 8th spot in allocation in SMH.
In a playing game, in a hottest sector in the world.
Yeah, so here are the companies that are in front of it inside the SMH ETF. Intel, Texas Instruments, Qualcomm, ASML, Broadcom, TSM, NVIDIA. Micron is right there. So AMD is 8th and Micron is 9th, and those percentages might change soon as well. And so you can see inside of the ETF that allocation, if the stock is performing, They're gonna reallocate the ETF for you.
Yeah, we'll see. And then, like even Meta is down 34%,
and has done nothing wrong. Like, I want to be very clear because I criticized them a couple years. They haven't done anything wrong
in 3 weeks.
Yeah. On the flip side of being historically having 21 days of growth inside of a company, and you're like, wait, this is on the other end of it?
Yeah, you gotta be careful.
After contributing to the campaign,
that's a
buying
fact.
a house in DC.
That's a fact. So,
and you can argue outside of Netflix, this has been the best media run of a modern media company probably ever. Their operating margin 42%. They got 81% gross margin.
Yeah. But I mean,
this is damn near a flawless media business, right?
But that's the problem, right? If you're looking at our companies growing, right? Are their revenues growing, but their stock is falling?
Engagement is up. People are using the ad platform more than ever. What if I told you 5 years ago that like people would spend more time on the app than they do with their family and on TV? You would think the stock would be up 400% or 500%, 300% year over year. And they have WhatsApp at a steal. What?
Yeah.
That's an interesting environment.
QQQ. Shout out to Invesco.
Shout out to Invesco.
Shout out to Invesco. That's a fact.
If you're interested in technology, that's a pathway.
Invest with Invesco.
Yeah.
Invest with Invesco. That is a fact. But okay, so here's the thing with this. Okay. The segue for this, because QQQ, you got Apple, Microsoft, Amazon, Nvidia, Meta, Google, Tesla. Tesla's in trouble. We'll talk about Tesla later on.
And inside of QQQ, just to add to that, it's more equal weighted, right? So when you see like XLK, where Apple and Microsoft are 20%, inside of QQQ is more equal weighted, where it's 9%, 10%, and inside of
it's equal distribution.
Yeah, that Max 7.
Yeah. What is the real price of products? That's what we're talking about off camera. And I think that this whole tariff thing is really starting to make people question everything. Like you see China, and what's popular now is furniture. And they're showing furniture, and they're showing like handbags and clothing items, how much they actually cost to make and how much they're actually selling for in China. And it's pretty eye-opening, to say the least. Right? So then it's like, okay, well, if I can get a kitchen, closet, bathroom, whatever, for 1/10 of the cost of America, right? Now you start to say, okay, well, what is the real price of a variety of different things in society? We know that, okay, Jordans are inflated and handbags are inflated, but nobody really ever asks the question of like, how much does a car really cost? And what's the real market value of a car, right? Because that's what China's really doing, is like they're starting to make you question the whole capitalistic society that we live in America, where there's no guardrails and greed has just led to such a markup on prices. It's almost unsustainable. While wages have stayed the same, right? Inflation goes up while wages have stayed the same. And nobody really questions it because we don't really have any alternatives. What are you going to do? Not buy a car? What are you going to do? Not live in a house? What are you going to do? Not buy this laptop, right? But when you start to actually peel back the layers, now you start to see things and you start to say, damn, this makes you re-question everything, right? It makes you re-question, like, why am I paying $100,000 for a car? Why am I paying $120,000 for my bathroom? Why am I paying $10,000? Even like the luxury items, like a bag, that's a choice. But some things are just like hard costs. Like you don't think about like that stuff like that, right?
Yeah.
And it's like, wait a minute, like has capitalism run amok to the point where it has to be reeled in with some level of high transparency, alternatives, and guardrails? That's what China's really saying. Like, look, yes, we have a society that's built on communism, and you say that communism is so bad, but we raised more people out of poverty in the last 30 years in human history.
Yeah.
Based on collective, even Charlie Munger, he had a great speech I saw on TikTok where he was saying that China did something that's really never been done in world history, where they built their country's economy in a very short period of time by collective like savings. It wasn't done through oligarchs, and it wasn't done through, you know, industry. It was done through millions of poor people truly believing in the system, collectively saving, pulling their money together and moving up. And he was saying that that was something that he in his opinion had never really been done. It kind of was a new model in society. But I think that we talk about stocks a lot, but you got to start to talk about the whole entire economic system. And is this something that is not sustainable?
It's broken for sure. It's broken. We were talking offline, but like there are cars 6 years ago that were $30,000 or $40,000 that are now $110,000. Like back in the day, $100,000 car was a super luxury car. Now there's some sedans that are going for $80,000 and $90,000. We've talked about the cost of living that's high, cost of daycare, cost of education. While the return on college education for many specialties have declined dramatically. And also, too, if we're going to pay a 200% increase over 5 years, I don't see a 200% increase in the level of care, whether it's in hospitals or daycare or education or just even in the products. And given this tariff situation, and this economic calamity that we're in, I think it is going to cause everyone to look and see what can we do better, for sure.
Yeah, part of it, how much of it is the belief system, like we were kind of talking about. All right, it's just a belief that we believe is worth that. So if you're looking at the Rolls Royce, or you're looking at, you know, high-end Mercedes, or you're looking at a Lexus, do you believe it's that value? And that's the price they're going to put on it, right?
Do we believe a Rolls Royce Cullinan or Ghost Spectre is worth $600,000?
Somebody's going to pay it.
Well, I think it's the luxury item. Yeah, because even like Birkin, even though people know Birkin now technically should cost $1,100, they're still going to pay whatever for it because those people can afford. Luxury items, I think, are different from essential items. Essential items is like a microwave, right? Like we don't really have a choice but to buy a microwave. Nobody's really buying luxury microwaves, right? But let's just say hypothetically, the price that we're paying for, let's say the price that we're paying for a microwave is a 90.
We'll check back in 6 months.
Troy, for
we'll check back in 6 months.
No, I'm just saying for the most part.
I know what you're saying.
That scale, I get you.
Yeah, we're not going to Louis Vuitton. Yeah, of course there are high-end microwaves, but for the most part,
yeah,
you're going to go to Walmart, you're going to go to Target. The average American is not looking at a microwave as a luxury item. It's looking at like it's an essential item that you need to warm up food. Right? Yeah. But what if we realize that these microwaves, and I'm just saying hypothetically, I haven't done the research, but what if we realize these microwaves are actually 90% markup? Right? That makes you question, like, then we're getting taken advantage of things. Like you can choose to buy Louis Vuitton. You can't really choose to buy a variety of other things that you just have to have. And if everything in society is marked up, well, that could lead to a rebellion.
If the prices have gone up exorbitantly, and you know, it's bad when business owners are saying, okay, these markups are too much. On both sides of the aisle and in all industries, it's like the pricing scales have changed too much where it's unsustainable as a country. And then, of course, that leads to record credit card debt, which is not being talked about enough. So yeah, I think it changes.
Foreclosures.
For sure.
Is that a solution though? If you in terms of gauging, is there a threshold that potentially could be put in place where it's like you can't go over this threshold, you can't put a 98% markup? Because in terms of business, right, when you think about hypothetically what is business, you're going to have a product, you're going to put a surcharge on it because you had to produce that product at a certain number, you want to make a profit.
For sure.
But is there, or do we need to come up with one that makes sense for an economy so that there isn't a revolution, really?
I mean, I think that's where regulation comes in. And I'm not like the hugest person on being like regulate everything down to where it's like you only make 20% profit margin. But I think even some of the essential items have now been priced as luxuries. So, and I think it'll get so bad where if you don't morally start to give back, i.e. Target, you're going to get shellacked in the market. I don't know how your little meeting with Al Sharpton went, but as a community, we're upset. You better fix something. Are you going to be running off the stock market like Xander just did in the background? So I think some changes need to be made for sure, because like no one wants to say it, but the country is collapsing at scale and in many areas. And for the first time in our lifetimes, other countries look like a better alternative to shop from and live in.
And it's not a democracy. And that's the thing that people fully need to understand too. America does a great job with marketing, and words are important. When you hear the term oligarchs, you think of Russia and you think of a repressive regime that's a few people are ruling, and that's not fair. When you think of the royal family, the Saudi royal family, you think of the same thing. You think of billionaires that have the say over the people, and the people have no rights. Well, what do you think we have in America? Right?
The 400.
When you got 9 of the 10 richest people in the world that live in America that have firsthand access with the government, with the president, they might not have the title of a royal family. They might not have the title of an oligarch. That's exactly what they are.
Absolutely. Like we witnessed in real time. And this happened in the Democratic Party, but it looked like the White House or parts of it were up for sale.
Perhaps, allegedly.
Allegedly.
Right.
And it says one republic, not one democracy.
So you said the economy's collapsing. How much of it is, because it feels very self-inflicted?
For sure.
How much weight do you put on that? Like who's in charge and the decisions that have been made over the past 3 to 4 months, right?
MAGA supporters, clip this up. I know he gets a lot of blame, but I think he put the final stick on top of the stack that broke the camel's back. America's been on the house of cards for a long period of time. And this is why one of the reasons we can't afford a recession, because it then unveils a lot of unscrupulous activities in a bunch of industries at one time. So this is just the first of the propaganda pushback from China, but I think what a lot of countries, they'll probably follow suit, but then it'll start to be revealed what healthcare costs are in other places. I know a lot of people that are traveling to other countries now for dental and
certain surgeries.
Absolutely.
Yeah.
And it's a lot more efficient too. Like even in Japan, like the healthcare regime, there are people that are traveling there 2 weeks and getting all their labs, all their blood work done. And now with AI being added into, I saw that report where like there could be a cure for all major illnesses within the next 20 years. But the fight is what country would get the patents to those cures. We're in an interesting time. And more than anything, I think America as a country has been too short-sighted because of the 4-year cycle. Just like the 3-month reporting cycle in the stock market, I think it's a mistake. Focus in 4 years on a time on how to run a country, it does not lead to long-term planning, because other countries are thinking 100 years at a time minimum.
Yeah, all those, like, how long has this guy been in presidency? China. He's been there forever.
Sound good to you right
now. Feels like it.
How long has Putin been there?
Netanyahu's been there for like 27 years. How is this democracy? Like he hasn't left yet.
Well, the people have voted him back in time and time again, right, Rashad? Same with Putin.
Putin, 99%
relevancy score.
Allegedly.
Yeah.
He's been there since 2013.
Who's this? China? Yeah, that's 12 years. You need 10 years to really make some change. Like you said, 4 years, because what happens after 2 years, especially in America, 2 years, they start running the new cycle.
You got to campaign again.
You're really only president for 2 years to really get everything that you need done, because then you got the midterm elections. And usually it's going to be an opposite party that comes in after midterms.
Then it's going to become
so you got 24 months to try to get things done
and make a bunch of executive orders.
And that's why nothing gets done. Okay.
Average cost for a microwave, to your point, is somewhere between $75 and $135, according to ChatGPT.
Then we're gonna go to Amazon and get it for $60.
I'm gonna undercut your cost until I put you out of business. Then I'm gonna sell it for $290.
You know how this game goes, man. I gotta tell you, you know how this goes.
Yeah. And then the data behind it. Oh, data's a new oil.
Appreciate you.
And if I create a lookalike audience or similar audiences,
5-star review
in AI with that.
Yeah.
Yeah.
Once you get the microwave, they're gonna sell you the vacuum.
Gotcha.
Yeah. And we got to talk about real estate at some point too. We're on the verge of a real estate collapse.
Rashad, we're turning to the doom and gloom report. Shout out to all you. Oh my God, you guys are so negative now. I'm like, no, this is called actual reporting and investigative research.
What happens? What happens when it doesn't go up? Real estate always goes up until it doesn't. Fall of an empire.
Yeah. And I wonder with the fight about raising interest rates, if quantitative easing will be used again in these next 5 or 6 years. Because if not, we may have a flat decade. Like one of my favorite exercises, everyone in ChatGPT, what would the returns for the tech market be if quantitative easing was not put into effect for that 12 or 13-year cycle? It would have been too tech, too oil if it wasn't for quantitative easing. Save the day. Like, if we're gonna be very honest, them flat years that Ballmer went through, without that free capital, the landscape will look dramatically different. It was needed at the time, but I think we probably had QE for a little bit too long as well.
Talking about investing, Tesla. Will Tesla hit $1,000 per share? Is that something that could potentially happen in the future? And there's a lot of calls inside of for Tesla, like some top Tesla investors, for Elon to step down.
Told you.
So, what's the deal with Tesla?
Will it hit 1,000? I love Kathy, but no, unless. Remember when we had the conversation about should it be a luxury car brand or should it sell to the middle?
Mm-hmm.
And profit margin concerns, and everyone's like, no, the word to scale, the automotive is through low pricing. It has not worked out for majority of car brands. Great exercise. Go look at how many car brands that sold a low price vehicle, how many of them went out of business in the last 40 years. The salute didn't help, even though he was giving out his Care Bear love to everyone. No, I don't see Tesla hitting 1,000 anytime in these next 4 or 5 years, even with the relationship that he has with the president and in that office, unless they get new leadership. And I'm going to be very honest. Tesla had a moment where it was like Tekashi was the new hot thing. And it was like, whoo, this may work despite. Those Teslas don't look as attractive as they used to. And I told someone this over the weekend. If you just compare BYD versus Tesla head up, and you took the logos off of them, the BYD cars look way better.
They're cabs. Teslas are cabs. Every Uber is a Tesla.
And once they got reclassified,
they're yellow cabs at this point. That's what they are.
But true.
No, but I'm saying if you get an Uber, 9 times out of 10 it's a Tesla.
It's Tesla, unless it's the one with the little Gulf wings. Other than that,
or the Cybertruck.
Yeah. Other than that, yeah. And one of the things that I used to have a lot of pushback on was not upsetting certain audiences. And I'm like, but what's the risk to reward ratio? Like him doing that and having that moment, was it worth the valuation that he lost? No, it's not. Is it still a leading American brand? Mm-hmm. Yes. But is there too much risk on a table for it to get to $1,000? Absolutely. I don't see it within the next 4 or 5 years. And I've been long Tesla for at least 6 years. It's still in Xander's portfolio to this day, but I don't see the upside potential for it to get to $1,000 or even $700. You have to be beloved amongst the fund of funds, the pension. Like right now, could you put Tesla inside of a pension? Fund to fund, if you were like running a fund for,
and the thing about it is that people have to stop saying that Tesla is a tech company. It's a car company
with some tech in it.
89% of his revenue comes from automotive. Him trying to do robotics, him trying to do all this other stuff. Tesla at its core is a car company, and it's losing its competitive edge in automotive
in that space.
And he's trying to divert attention by doing robots and focus on what's important. And they're losing that battle. China is a major market for it. They're going to lose China completely eventually when China mandates that you have to buy their electric car through electric car companies. They are not selling as many cars as they were before. He's tarnished the brand dramatically. They have a lot of problems when it comes to selling cars, and that's what they are, a car company.
Well, they get put in the growth category because of the technology, right? So it becomes the autonomous driving, it becomes the robotics, it becomes the AI agents. The interesting part is like, yeah, if we can't see it go to 1,000 in 5 years, let's think short term, because earnings season kicks off pretty much this week. They report tomorrow. We heard everything you just said I was going to mention. Do they drop sub 200 here? Right, when we're talking about, yes, the China market decreased. BYD has taken over that. They've dropped 18% there. We've seen that domestic sales have gone down for the first time. We saw them at 479 in December. They're down here about 224. Are we looking sub 200 by the end of the week? I mean, is it?
Should more than likely. Ultimate price, well, I would like to get them at is 125.27. But could they be sub 200? They could be sub 200 possibly by Wednesday. So net profit margin is 7.3%. When the net profit in 2023 was 15.5%. So you don't want degradation of your brand. When you do a SWOT analysis and you put weaknesses and threats, you usually don't want to have a country that is upset with you. And then you don't want to upset the majority of your base as well, while the profit margin is going down.
Right.
So everyone in the comments, this is not our take on something. I want y'all to stop talking about takes and look at the facts. If they had a profit margin of 15 or 25%, that would be great. But he's not delivering on them robots or that autonomous bullshit dream he's been selling.
Exactly. All that shit is bogus.
Get the fuck out of here, yo.
Yeah, that's supposed to happen in June. We'll see what happens with that. But you take into the fact with tariffs, and that's going to affect them for sure. You take into the fact where you drive the price of some of these vehicles, and then those vehicles don't sell. So you're missing profit margin there. And then the affordable vehicle that you're going to put out, you've now delayed. So like all these signs don't point to something that's positive. But we've seen this before. And that's the tricky thing. Like we've seen this before with Tesla. Everything is mounted against it, and then the stock performs after earnings. I don't know if that happened.
Was there quantitative easing during those times or not?
Even like 2 quarters ago, this happened. And it was like, wait, how? And they were like, oh, the robotics that's supposed to come out next year. And it was like
fake news.
Exactly. But investors believed in it. And that's the crazy part.
You only gonna have so many tricks up your sleeve until you realize that you're bluffing. All robots, a bird in the hand is worth 2 in the bush. What do you have right now today? Robots and autonomous driving and 18-wheelers that drive themselves. None of that is happening right now.
If he made an autonomous baby making factory to the moon, my boy, that's not it.
He's selling promises of things that may never happen. What is currently happening right now is concerning.
When he has Grok, which is a great product. And let's not forget that OpenAI got stolen from him as well. So there's some tech promise that could have been implemented inside.
Autonomous job is happening.
But he also stole Tesla.
Well, he bought in.
Yeah.
No, he stole it. He brought in the company for $6 million. Then he did an aggressive takeover and forced the founders out.
So he bought it.
No, he had an aggressive, hostile call it a hostile takeover. He had a hostile takeover.
Yeah. But prior to that, hostile takeover.
He's an investor.
Yeah.
So he stole Tesla.
Yeah.
Allegedly.
Yeah. A raider. He was a financial raider.
Yeah. No, I said some of the things ours is like the robotics. Like again, when you the price for that. Who is your client that is going to facilitate that type of revenue that you're going to need from that type of robotics? The autonomous driving thing is real. Like they have that now. We're starting to see more in Atlanta. We see it. San Francisco. We see it. Will that spread domestically? Who knows? Having a partnership with the Uber makes sense. Obviously, for the reason that you just said. Like every time you see it, you call the Uber and it's a regular one. It's going to be a Tesla that picks you up. How long will drivers not be in those cars? We don't know. Right. But right now, the way things look, this looks like it's going to be a negative report. We'll see what happens tomorrow after close.
And in the robotic space, they have a hell of a competitor in General Dynamics. Nowhere near close. Like they are. And their stock is still doing incredibly well. At 271 last year, had a high of 316. Quiet company. Most of the Terminator-esque looking robots that's their technology and actually works.
Barbarians at the Gate is a movie that everybody should see that explains what we call corporate takeover artist. That actually documented the 88 leverage buyout of RJ Nabisco. I think the lead character in that movie is Danny DeVito. And it shows you how sophisticated Wall Street insiders, investors come in and they take over companies.
Private equity?
By force. It happens. It's a real thing.
Carl Icahn was... A lot of it doesn't get talked about, but one of the reasons why Apple ended up being a favored publicly traded company was because of his involvement with it.
Yeah, create the board. Board may vote you out.
So Elon, back to Elon. He's not traditionally an innovator. So this is when you have to start innovating. The only car that he ever designed was the Cybertruck, and that's the most recalled car in American history. He never designed the Model S. He didn't design the Model T. He designed the Cybercar. That's his baby. That is the most recalled car in American history.
Well, I can't say he's never innovated.
What did he innovate?
In terms of
Starlink.
Well, that, but in early days, before PayPal was what it was, that was a combination of companies coming together.
Peter Thiel.
No, but there was two companies that came together to form PayPal. So he was innovative in those days.
But
has he been innovative?
But he wasn't an alpha in that PayPal store. That gets revised.
He wasn't the brains behind the operation.
I didn't say he was the brains. I said he was innovating.
I'm thinking as far as
process.
a creator.
Create a product.
A creator. He's not a great creative. He's not a great creative.
Oh, he created a lot these last 6 years, yo.
Some of them
Van Gogh.
Some of the last one, he said he wasn't even sure. He don't even know if that's his creation.
Could be a legend. Could be.
Yeah. So hopefully they right these wrongs and make the company better. But I said maybe 6 months ago, he'd go to being chairman, and this won't even be his main focus. I got a lot of pushback. I'm gonna say it in the comments, and I know y'all don't like when I get in my little rants. Stop pushing back on a space that you did not know about prior to 5 years ago.
We'll see. We gotta see. I did the talk
Chairman
around charging stations and the rechargeable batteries. It's kind of died down a bit.
The solar bullshit.
You know what I'm saying? All that is just he just saying anything. Solar panels. Oh yeah, they're a tech company because they're gonna have solar panels. Didn't work out. They're gonna have robots. They're gonna have self-driving cars. They're gonna have pizza.
All great ideas.
It's not happening. He's coming up with all these ideas, and none of them are happening.
But I will say, out of that portfolio, Starlink is the brightest star in that portfolio galaxy.
And he's going to ruin that by his actions. He already lost $200 billion through Carlos Slim. When he aggravated him and he canceled all his contracts in Mexico. It's only a matter of time before he pisses people off globally.
We got to see SpaceX as well. We'll see. Government funding. You got to call the Doge people.
And he's going to hurt himself with that because there's going at some point in time there's going to be a democratic regime that comes in.
Yeah. That's what I said. The government funding might look different.
They're gonna have revenge, payback for what he did.
He can go do what Zuckerberg did and just go buy a house out there and go get some money and say I'm sorry.
And it didn't work for Zuckerberg. He still got to go to. He's in court right now.
I know. Shout out to my boy. My God.
And he still got to go in front of the court. Okay, before our guest comes on, let's talk about Jerome Powell. Okay, so Trump has attacked him. Friday, he attacked him. Jerome Powell spoke on Thursday, I believe, or Thursday or Friday, and he pretty much said that, tariffs would definitely lead to inflation and tariffs would lead to a slow growth in the economy. I guess Trump didn't like that too much, called him Mr. Too Late. And now he doubled down on it, called him a major loser, said it's time for him to retire. Can't wait for him. And now I heard that he's even pursuing, he's examining ways that they could potentially get rid of him because, they really can't get rid of him unless it's like gross negligence.
Is that examining? That's a new word.
Examining. He's sleeping. It's okay. I got you back there.
There you have it. So Jerome Powell said they may or they may not cut rates. He hasn't committed. Trump wants a commitment and he wants it to happen as soon as possible. Is that something that's going to happen, and is that even something that could be helpful? Because some people say that could actually be even more harmful to the economy.
Yeah, this is above my pay grade for sure. I know I may have hubris when it comes to the stock market, but these issues are outside of my class, if you will. I feel for Jerome Powell because you can either pause rates cautiously or cut aggressively. Both are going to have negative reverberations in the marketplace. And the part that's really interesting is if I'm him and I'm planning, let's say I wanted to pause rates. With leadership changing course every 2 weeks, I can't even plan on how course correct. Like I can't tell the world, okay, I'm gonna bring interest rates down to 2%, and I'm hard landing, but in 2 years we'll be fine. And in 2 weeks, they change course on tariffs or policies, which way make thwart my plan and then make me look like the bad guy. So he's in an unwinning position. It's almost the equivalent of like athletes who have to play for a different coach every year.
Yeah.
Like it reminds me of the Devin Booker situation early in his career where he was just like rotating through coaches. So he's in an unwinnable position. But the one thing that I've learned, and I picked this up from you guys, like there is a high alpha and high return on just having peace amongst partnership. There's no way he can have this much clashing with Jerome Powell and expect the American economy to do well. It's like me going to a banker and cussing the banker out, like, well, let me deposit my money. I'm for sure ending up on that list. And I won't be able to fill out that withdrawal slip no more. So I'm not sure what they should do here, but I know this course of action is not best. But what do you guys think?
I mean, it goes back to the lack of planning. I think the tariffs obviously have stifled the economy globally and definitely here domestically. And, you know, whether it was a suspension and you saw a lot of retail and institutional investors like, all right, a slight cat bounce in the market. And now it's like, well, I'm going to keep these things in, but I need a new play. Like I need something that's going to give investors some sense of relief. And I'll bully my way into talking to the Fed, making the Fed chair try to do what I say. Right. And it hasn't really worked because Jerome Powell had a plan. Like he was on pace. And we debated this for 2 years about the soft landing.
But he was on track. We have to give him credit.
It was right there. He was right on pace to have this soft landing. He already had put in place 2 rate cuts this year. And now because of the uncertainty that the market has faced over the past 3 months, it's like you're almost in a position where it's like, do you try to help out the economy by lowering rates while this guy's like saying like, I should have fired you yesterday, knowing that you can't fire him. It's an independent position, right? Like as the Fed chair. But like the pressure of that, right? It almost makes his legions of people and believers like this is the reason like this is happening. You're the reason that eggs are causing this way. You're the reason why unemployment is going to go up. You're the reason for inflation. And they're not really educated on how this really works. And so that pressure of every day now until something happens and him going and tweeting negatively about him, it doesn't make sense. But none of it makes sense, right?
Well, Josh Brown actually said something that was pretty insightful where he was saying that next up to line, I forget his name, but the next person up to line is Trump's best friend. It's his son-in-law. So
Jared Kushner?
No.
Oh.
Not Trump's son-in-law. It's Trump's best friend.
Oh, okay, got you.
That's the next person up to line for the Fed chair. So
okay.
He's pushing to try to get him out as soon as possible because he knows that the next Fed chair is going to be in pocket pretty much. Paraphrasing. Is going to be friendly to the Trump administration. They have close family ties. And he can pretty much get what he wants out of that situation, he thinks, because of the family relationship that he has with the father and the whole situation.
So the goal becomes put as much pressure on him to hopefully he'll resign.
Yes. Or try to kick him out. I mean, Trump, I think anything is possible with Trump. They're going to try to see if they can find a way. I mean, they've already gone against federal law. And they've gone against Supreme Court orders in the past. So it's not out of the realm of possibility for him to say, you're fired.
Yeah,
because the only thing that they can say is that there's no recourse for you to do that. All right, well, sue me. In the meantime, I'm gonna put somebody else in. I'm gonna use my presidential power. I'm sure there's some kind of, mandate that happened in 1640, or so he's gonna do some kind of thing where it's like, okay, I'm gonna use my presidential power, the state of emergency, and I'm gonna take you out. I'm gonna put him in, and then if there's a problem, then have the Supreme Court take it up with me. And if the Supreme Court tells me that I'm wrong, then I'm not gonna listen to them because I don't listen to the Supreme Court anyway.
So I think the guy that they have rumored is Kevin Warsh to replace him. So they said they started interviews last week to replace the Fed chair. My God, Jerome.
So we'll see. But okay. Also, let's talk about gold. Gold, all-time highs. Not really too surprising, being that it's a hedge when people are nervous about what's going on in the world, and especially since the decline of the dollar. We'll talk about that with our guests. But are we seeing a legitimate long-term breakout for gold, or is it just a temporary hub while people figure things out?
If we look back, a lot of these positions start to be built around 2019, when a lot of investors knew something was going to come in the market, and it's been steadily rising ever since then. But if you go back even further, even back to the 01, 02 climate or stock market kerfuffle that we had at the time, a lot of the gold bugs at the time were saying this is the best way to hedge, and that's been over 20 something years. I don't know about the reports of gold going to 9,000 and all that over 3 or 4 years. I think that's a little bit misleading, but I think we have been in a long-term bull run for gold, and I think it's going to continue, especially with all the uncertainty that there is in the market. I know we talk a lot about hyper concentration and whether it's good or not to put money into like a singular stock, but on a commodity side, if you're holding for long term to offset, this is like the one part of the all-weather portfolio that Ray Dalio talks about that I absolutely do agree with. So if you could get a chance to get in maybe at 31.15, if you haven't built a position yet, that's a good place to maybe start. But I would definitely look to hold this for 5, 6 or 7 years while we have a bunch of turmoil. And during that 07, 08 run, gold did incredibly well as well, for those of you who are worried about a recession.
Gold, for those who they're gonna be like, how do I invest in gold? Gold ETFs.
Or you can go to Johnny Dang. Leonte, this summer, I may
gotta call some people.
Hey, what y'all got? I'm gonna call y'all guy real quick. Gold bullion bars, and I'm gonna give me a safe from China to put it in. So, but yeah, GOD is a good option, but and for my traders, the gold future for short term trades are good as well.
Yeah.
Oh man.
Gold.
I know a dude named Johnny Dang.
It's done better than Bitcoin and the S&P 500.
Yes, it has. Yes, it has.
Financial conspirator. Hey, shout out to my guy.
Yes, it has.
Yeah, it's done incredibly well over long term. In 2005, it was at $41. It's now at $314, and been a safe haven. Homework assignment: what is the average yearly drawdown of gold? Going back to taking the risk off the table. That's the most important thing in relationships, business relationships, investments, products. Like if you have a recall on that Cybertruck like that, the risk is it's not going to work the way that it should as advertised. Not good for business. The marketing campaign was great, but if the recall is, I didn't know that, the highest in American history.
They put that thing in front of the White House, remember? Didn't work.
It's not gonna happen for the Cybertruck.
No,
nope. Had it spark when it started.
Hello.
ASML has experienced approximately 23 down weeks over the past year. Is this a hiccup for the company, or did they hit their peak in 2024?
I don't think they've hit their peak.
Mm-hmm.
I just think that the global backdrop of what's going on, and there's so much, and I know you guys hate when we do this, but there's so much that we can't say that I want to say. But I think a lot of these companies are trying to figure out who's going to be in the number one position going forward for the next 50 years. And they're going to shift their business priorities to set countries or whatever version of bricks that is created. I think ASML is a very good buy, definitely better than AMD for sure. Forgot to for 86.15, I'll probably load the boat there. I think that would be a generational buying opportunity, but I just think that the global backdrop and everything that we're going through worldwide has put a lot of pressure on them. So
yeah, this is a measure of uncertainty when you
sure.
talk about what they do, what place they stand in the supply chain of all semiconductors, specifically the ones that are created through UAVs, the ultraviolet lithography machines. And so if the demand of GPUs goes down, then the demand to create the machines that make those GPUs will go down.
Yeah.
And the manufacturing of those GPUs will go down. And the price point, we talked about pricing, but this is one of those things when you look at the sales, there was growth from year to year. I know they just reported last week with TSM, but if you look at what they did in 2023 compared to what they did in 2024, I think they moved in the last quarter, they moved 66 units, right?
Yeah.
That sounds like, all right, that's great. Well, how many did they do in 2024? Fourth quarter did 73. So there's an uptick. The problem is that they expected it to be more with the demand of AI and the demand of GPUs. The issue is the price point for these machines.
For sure.
The average cost, no joke, for one, the average cost for a EUV lithography machine is between $183 million to $380 million. So you show me how many companies can afford to have one of those units.
Yeah.
Right. Can the TSM do it? Yeah. Right. Can they afford to use them for their machinery? Yeah. But there's not many. And so if we see uncertainty around semiconductors, how we're going to be using them, the output of it, we saw what DeepSeek did, and that's going to have an impact on the ASML. But they run a monopoly, allegedly. I'm going to say this because I don't want, there's a lot of companies, Mag 7 companies that are going to court. Allegedly, they have a monopoly on the space because if they don't make the machines,
yeah,
TSM can't manufacture them, which means that AMD will have nobody to manufacture it for it, to put it out. Broadcom as well, and all of them pretty much, if they're going to move to the lithography that ASML produces, which is where the future is headed in terms of how small you can, how much you can put on a GPU, which means that the nanometers have to be anywhere between 5 and lower, right?
Yeah.
There's talk that there might be 2, but then after that, you're going to quantum computing, and so not that I don't think it's their peak. The uncertainty around the space is what's caused them to have some of these negative weeks. But we'll see. We'll see over the next 2 to 3 years. I still love them. That's all I think they're necessary in the space.
Meanwhile, Huawei readies a new AI chip for mass shipment as China seeks to fill the void caused by NVIDIA.
Yeah. So NVIDIA somehow somehow Hopper ended up in China. We're not really sure how that happened. But there was a fine that had to be paid, and NVIDIA was hit with a $5 billion fee, which they said they would do. But the next day, after that was announced, CEO Jensen Huang was in Beijing. Coincidence? I think not.
Going back to my Amazon point, revenue by country, 13% in China, 16% in Taiwan, 14% in Singapore. So if one of our best companies is shipping the best product and we're only getting about 47% of said technology, if it was us, we'd be deported, allegedly. No, that's revenue by according to their report.
I'm saying shipping to that company.
Oh, shipping, it flew over there.
Yeah. It got there. And so their thing is that always been, if we can't sell you this product, whether it's, well, Hopper's got there, but if it's Blackwell or Blackwell Ultra or Rubin, if we can't, then let's figure out what product we can make specifically for you that we can sell to you, right? So if Because again,
that is crazy.
You said that, like, the administration may change in 4 years. It might be different, right? So you're already preparing products for the next 5-10 years. If we can create a product now, and when things may change, we'll have those ready to you, available. We'll see what happens. But like, business is global, and so I get why he goes, because he's looking at, like, nothing's going to stop us. We're going to create a product that they're going to be able to buy.
Movie Lords of War, I think, with Nicolas Cage, about selling arms came to mind. Homework assignment. Go watch this weekend. Must be two sides.
That's a great parallel.
Very interesting times we're in. And all of the great new AI apps are not coming out of the Netherlands or South Africa. They're just popping up all through China while getting to our tech. But what do I know? What do I know?
Okay. How far can Bitcoin fall during a recession?
Bitcoin won't fall ever. Shout out to my Bitcoin maxes. I'm a weaponize your audience. I am interested to see how it sustains, but I don't think, well, it hasn't performed as well as it could have. But if we get to a recession, maybe high 40s, maybe like 47,000, something in that range. But I don't think, I know people wanted to fall back to 30,000 and 20,000. I don't think we'll ever get back to those levels, given the influence that the institutions have. And not if Michael Saylor can save the day. So I think high 40s, maybe 39 at the lowest. But I think during a recession, this will be bought a lot faster than that 22 drop for sure. So,
okay. Well, without further ado, we have a guest that has just joined us.
Yes.
Let's bring him up. How's it going?
Hi.
How are you?
Pretty good.
Yes. Thank you for joining us, Steve Eisman. We talked about you earlier in the show, but legendary investor, obviously a lot of people might know you from that movie that got a lot of attention, The Big Short.
Big Short, one of my favorites.
For sure. 2008, you were one of the few people that actually predict the housing market crash and a variety of other things. I believe that you used to work for Newberg & Berman as an analyst, and now you have a podcast. So, been a voice in the markets for decades. So first and foremost, thank you for joining us. Appreciate it.
Thank you for having me.
So, a couple of questions. Being that you predicted The Big Short, right, in 2008, you kind of forecasted that. Do you see parallels in today's economy? I know that that's something that a lot of people are nervous about, as far as a recession is one thing, but perhaps even something bigger than that. That's what some people are actually, predicting. Do you see parallels, and are you bearish now the same way you were bearish then?
Do I see some parallels? Sure, I see some parallels. Am I as bearish as I was then? Not even close. I mean, not even the same universe. So let me just elaborate a little bit about that. Do I think that there could be a global trade war? Sure, it's possible. It's also possible that there won't be a global trade war. Do I think that a trade war would cause a recession? Absolutely. I think a trade war would cause a recession. Do I think a recession that could happen because of the trade war would be a financial calamity on the same order as the great financial crisis of 2008? Not even close. Not even in the same universe. What happened in 2008, I mean, if you could boil down the financial crisis of 2008 into a paragraph, it would be the great financial crisis happened for 4 reasons. Large financial institutions had way too much leverage. A big asset class, subprime mortgages, blew up. Those same large financial institutions owned a lot of subprime mortgages, and derivatives, in particular credit default swaps, which is a very technical financial instrument, tied the balance sheets of large financial institutions all over the globe into a spider web that was so complicated nobody knew where it began and where it ended. That's the cause of it. The reason why that was such a calamity is, look, if General Motors, God forbid, went bankrupt, let's just say, and the government didn't bail it out, and it was liquidated, that would obviously be terrible for General Motors. It would be terrible for all the employees who got laid off, and all the companies that supply stuff to General Motors, maybe some of them would go bankrupt. They would certainly have problems. Maybe that would cause a recession in the United States. Possible. But that's all that would happen. But if you can't get your money out of the bank, if the large financial institutions go down, planet Earth burns.
Yeah.
That's the end. So where are we today? You know, post Dodd-Frank, the leverage of large banks is literally less than half of what it was. It's probably almost 2/3 less. That's enormous. You know, so for example, Citigroup, which used to be levered officially 35-1, but if you added up all the stuff that didn't officially show up on its balance sheet, but they were responsible for, it was 40-1. Today it's 12-1.
Yeah.
That's like the distance between Mercury and Pluto. You know, to blow up a bank that's levered 40-1, if I could use an analogy, takes a pebble. To blow up a bank that's levered 12-1 takes a meteor.
Mm-hmm.
So do I think that, you know, whatever President Trump is doing could potentially cause a global recession? Sure, it's possible. Do I think that would cause a financial crisis that would cause the banks to go down? Not at all.
Looking at the state of the economy now, right? We look at global trade. Did it need to be changed? Yes. Did it need to be blown up? I mean, there's plenty of skeptics on that. I wonder, when, as you look at it, what do you think would have been the most effective way to get some of these trade solutions from country to country or from a global standpoint?
This may be a little bit controversial. I don't completely disagree with what President Trump has done in terms of imposing tariffs to get the ball rolling, because I think if you went to any country and said, look, we don't like the terms of trade, let's talk, they'd laugh at you. They'd say, go away. So the only way you're going to get people to change the terms of trade is to put a bazooka to their heads. Mm-hmm. What I don't like is the chaos. We're in and we're out. We're out, then we're in. Here's our tariffs, and then there's our tariffs. We're taking it away. We're putting it back. That causes too much chaos. That's not my strategy. You know, President Trump loves chaos, but most people in the world don't. So that's where I would disagree.
If you were building your Big Short portfolio today, what's the one trade that looks almost inevitable to you that will pan out over the next 4 or 5 years?
I have no trade that I think would pan out within the next year.
Okay. What about 4 to 5?
4 to 5, I still think that most of the technology trades that people have, you know, whether it's NVIDIA or Microsoft, any of the well-known will be great, because I think we are still in the very, very early innings of AI. Very early innings. We're like inning 1.
Yeah.
So, you know, between now and inning 9, it's going to be a bit of an adventure, but I think if you stick it out, you'll make a lot of money. What's going to happen within the next 6 months because of all the trade negotiations, I wouldn't have a clue. And I just would say you need to keep your risk lower. I would not try and be a hero right now. I don't think, you know, some people would argue that, you know, the markets come down a lot, so valuations are better. And, well, of course, the market's lower, the valuations look better. That's the tautology. The problem is that if you go into a global recession, all the earnings estimates are going to come lower, so then it doesn't look so cheap. On the other hand, if most of the countries settle with the United States and then everything is fine, it'll have been a great time to buy. But I can't handicap that.
How much risk are you keeping on the table, if I may follow up?
In my own personal portfolio, I have about 15% cash right now.
Okay.
Which is a lot for me.
I'm
very long term. What I have done is I've gone through my personal portfolio and any stocks where I said, do I really love this?
Mm-hmm.
Why do I really own this?
Let's trim a little.
Was there any thesis creep? get rid of it. So that was the first thing I did. Then I took a lot of things just lower, and but like I said, on long term, the problem with like, let's say, liquidating your portfolio, if you wanted to go to an extreme, is you got to pay over 35% capital gains taxes. So, do I think the market's going to go down 35%? I mean, it could. I mean, if we have a global recession, it's not impossible, but it's a lot. So I'd rather just trim some risk and just sit on the sidelines and sit and wait till it's. And look, if things get better, if you miss the first 5% move, so what? If all the trade stuff gets settled one way or another, it'll be a bull market again for years. So who cares if you miss the first week?
Yeah.
The dollar is, I think it hit a 3-year low. Is that something that's concerning to you?
Let's do the doomsday scenario that some people like to paint. So the doomsday scenario would be like, the U.S. deficit is too big. People are not going to see U.S. bonds as the safety vehicles that they once were. So they're going to sell the U.S. bonds. And that, of course, causes the dollar to go down. And something else will replace the dollar as a reserve currency. And there goes the United States as a great empire. And it's Armageddon, and cats and dogs are lying together, and whatever else happens in Armageddon, depending upon your religion. But I think what people don't, and by the way, that thesis has only been around for 40 years. So I remember in the 90s, Pete Peterson, who had been one of the founders, I think, of KKR, was talking about how the deficit's way too big and it's a disaster and God help us, et cetera. And that was in the 90s. And here we are, 2025, where we're all still pretty healthy. See, what I think people miss, and by the way, I can't talk, what happens short term to the dollar, what happens short term to people trading in bonds is not something that particularly interests me. So the fact that the dollar has sold off has, I think, got a lot more to do with, hedge funds repositioning, de-risking, looking for safe havens. But long term, what I think most people don't recognize is that the financial system of planet Earth runs on treasuries. Banks, for example, lend to one another overnight in what's called the repo market. And the repo market is only trillions, and it's all in overnight treasuries. So to make an argument that the dollar is going to lose its reserve status, I think you have to make an argument that there's going to be some sort of substitute for treasuries, especially short-term treasuries. And right now, there's no substitute for short-term treasuries. I mean, banks are not going to park their money in Chinese bonds. They're not going to, there's no euro bond of any real significance. There's no alternative. So as long as there's no alternative, it's not something I particularly worry about all that much, even though people like to talk about it on CNBC and, paint doom and gloom. Listen, I predicted doom and gloom once. Once was enough. I'm not interested in predicting doom and gloom again unless I really, really seriously thought it was possible.
That's good news to hear. You brought up AI. You said we're in the, potentially the first inning. There's been a lot of talk about bringing supply chain back to America. You saw a lot of the investment in AI from a lot of the Mag 7, TSM included, about bringing data centers and things of that nature to America. I want to get your thoughts on the idea of manufacturing production happening here. Companies like Apple come to mind when you think, how is it possible? Will we be able to afford that type of labor, that cheap labor, and to have the level of production long term? And for the short term, how does a company like that even combat in that environment where it's like, it's going to take 5 to 10 years to build that here to even get that up and running? What are your thoughts around that, bringing the supply chain back?
Well, I think some of the supply chain was already coming back to the United States post-COVID, because look, the global supply chain was created over a 30, 40-year period, very efficient, very cheap, and it turns out very brittle. And we learned that in COVID. So some of the supply chain was actually coming back here to begin with, because if you're, I mean, think of it this way: if you're the CEO of a company, some type of manufacturing company, and your supply chain completely broke down during COVID, the board's didn't blame you because nobody predicted COVID, but you only get one bite out of that apple. You know, if something were to happen and you didn't have a supply chain again, that's your job. You're out.
Yeah.
So I think some of the supply chain was coming back. How much more of the supply chain? I mean, do I think we're going to make Apple phones in the United States? Probably not. You know, I think maybe they move the whole thing to India. Do I think more manufacturing will come back to the United States? I do. You know, what parts of manufacturing? I mean, let's draw up a list and we could discuss it for a couple hours. So I don't know. I don't know which parts of manufacturing are going to come back and which are not. I just don't. I know that some will.
What are your top 3 favorite global macro indicators or technical indicators to know when you should be looking to enter a position?
Well, that's a small question.
You gotta ask what the people want to know.
Start a little smaller. I actually don't think of it that way. You know, one of the things that I've learned over the years is, this is my opinion, I don't think that there's only one way to value stocks. You know, some people do. Some people think you just do some sort of discounted cash flow model. I actually hate that method.
Yeah, I do too.
But I don't. I don't think that there's. What I do think is that there are 11 sectors in the S&P, and each sector has subsectors, and every one of those sectors or important subsectors has a mafia. And what I mean by that is the people who are the experts in the area, who traffic in this area almost exclusively or semi-exclusively, and that audience is usually composed of sell-side analysts, buy-side analysts, and certain portfolio managers who really have real expertise in the area. Now, I know this for a fact because for a very long time I was chairman of the financial services mafia, and each mafia determines 2 things. Number one, what are the terms of debate in terms of what should we look at to determine whether our sector is going to do well or do bad? And what are the valuation parameters that we care about? You know, so banks, for example, are valued on a price to tangible book value. Tech stocks are valued on some combination of PE, cash flow, EBITDA, discounted cash flow. It depends on the company. So I operate within the terms of each sector. I'm not going to convince people. It's very difficult to convince the mafia that they were completely wrong about how they should view their sector and how to value the sector. So, you know, take lending companies, for example. The 2 most important variables are the yield curve and, more importantly, credit quality. What are the credit trends? That's what I look at. That's what I care about. You know, other sectors, you know, there's, if it's a subscription-based model in software, people care about how big is the potential TAM, the total addressable market, and what are the trends in terms of subscriptions. So each sector is different. I don't have, you know, one global variable that I look at unless I'm worried that there's going to be some type of bad recession.
What are your thoughts on Bitcoin and other digital assets as far as long-term potential?
Another small question.
Yes.
Let's talk about the Yankees. It'll be easier. I don't play Bitcoin at all. I'm not long it, and I'm not short it. And the reason why I'm not long it or short it is that no one has ever been able, to my satisfaction, been able to answer one very, very important question.
Okay, what's that?
Which is, why should I own it?
And store value.
Yes, I'm coming to that. Okay. Yeah. Don't jump the gun. I'm going to answer the question. So the people who consider themselves experts in Bitcoin, if you were to ask them, why should I own Bitcoin? I think the answer you would most frequently get would be something like, over the last couple of decades, there's been way too much government debt. So the value of fiat currency, which anyone out who doesn't know what that is, which is most people, fiat currency is government created currency, which is every currency other than Bitcoin, etc. So fiat currency has been debased, is the argument. And you want to own an asset that will do well as that debasement continues. And the problem with, let's say, shorting the dollar is currencies all trade relative to one another. You just can't go out and short the dollar. You have to go out, let's say, and short the dollar relative to the euro, or the dollar relative to the yen. And they all stink, according to this thesis. The dollar is just probably a little bit better than the rest of them. So if you want to hedge against basically all of these currencies, buy Bitcoin or some other digital currency. As far as I can tell, that's the major thesis that they propagate. So my response to that is, okay, if that's the case, then how should Bitcoin act? In other words, if your thesis is right, then on days where people are worried about inflation, they're worried about the economy, NASDAQ is down huge, et cetera, Bitcoin should go up. And on days where everybody's rocking and rolling and risk is on and NVIDIA is up 5% and Microsoft is up 3% and every, risky tech stock you ever heard of or didn't hear of was up 7 or 8%, Bitcoin should be down. And that's not how it acts. It acts exactly opposite. In other words, on days when NASDAQ is up a lot, the correlation between NASDAQ and Bitcoin is very high. It tends to be about 60 to 70%. So the asset acts opposite to its own thesis. And I don't know what to do about that. I was talking to a friend of mine. I said, imagine if I had a thesis as to, I'll pick up a financial company, Capital One, credit card company. And let's say my thesis was the yield curve is going to steepen. I'm predicting the yield curve is going to steepen. Credit quality is going to get better. Capital One's asset earnings growth rate is going to increase, and the stock should go up 30%. That's my thesis. And let's say the yield curve steepens, credit quality gets better, Capital One's earnings go up, and the stock goes down 30%. I'd say to myself, I don't know what I'm doing. I clearly don't understand this stock. So the problem I have with Bitcoin, again, is that it acts, as far as I can tell, opposite to the majority thesis as people who own it, propagate. And I don't know what to make of that. That's why I don't own Bitcoin.
Whew, that's a lot. All right, so
it was a big question.
Yankees and Mets. Honest answer.
I got Yankees and Mets. Who finished was a bit.
I don't have an opinion. That's too hard for me. Bitcoin.
All right, perfect. Here, so I want to go to this. So this global trade war kind of boils down to us versus China, and so China has put out a recent statement. If anybody tries to negotiate with them, there'll be tariffs and inverse, kind of like what we've done to other countries, right? To isolate China. Best case scenario, right? How do you think this plays out? Right? We know what can happen on the worst case scenario, but in the best case scenario, how do you see this playing out?
Okay, so let's put some numbers to this just so everybody's on the same page. The percentage of US GDP that comes from exports is 11%. That is the lowest number of just about any country in the world. We are the way to think about it is we are the most insular economy of any developed country. If you were to Google what percentage of China's GDP comes from exports, it would say 19%. But that's not really true because China ships a lot of things to Vietnam and Cambodia, et cetera, which then makes its way into the world so they can avoid some of the tariffs. My guess is that 30% of China's GDP comes from export. If you look at Europe, any major country in Europe is over 30%, with the exception of Germany, which is over 40. Canada is at 35, and Mexico is at 35. And of that 35, 25 points out of that 35 is just exports to the US.
Mm-hmm.
So in terms of just playing poker, who holds more cards? That's the United States, because our GDP is less dependent upon exports than anybody else. That's the first thing just to say. So then what conclusions can you draw from that? I think the major conclusions that you can draw are, number one, the US is in the best position to negotiate a deal with anyone. Number two, if everybody's rational, they will try and cut as good a deal as possible with the United States as they can. However, to quote the great philosopher Reacher from the Amazon Prime show, Reacher, in any investigation, the details matter.
Yeah.
And in any trade negotiation, the details matter. So let me just give you an example of why this is so much more complicated than just everybody just being rational, which is why I can't handicap it. So the European Commission, before President Trump made that announcement a couple of weeks ago on that Wednesday where he imposed all those tariffs, the European Commission, this is public information, came to the Trump administration and said, we will cut tariffs to zero throughout Europe. And the Trump administration said that's not good enough. And the reason why that's not good enough, there are all these other restrictions throughout Europe that make it difficult for the US to get certain types of goods into Europe, like agricultural goods, for example, or champagne in France. As far as I can tell, the European Commission only has authority to negotiate tariffs. The rest, anything important to any particular country, that country has, like, let's for example, the European Commission wanted to reduce all agricultural barriers of our stuff going into Europe. France has an effective veto of that because, and there's nothing the European Commission can do about that. So my suspicion is that Mexico and Canada will cut some sort of deal with the United States because they really don't have a choice. I mean, when 25% of your GDP comes from exports to the US, there's not a whole hell lot you can do. I think the UK will cut a deal. I think a lot of Asian countries will cut a deal. Europe will be very much on a case-by-case basis, so it's very hard to tell. And we in China are going to go head-to-head for a while, and then I don't know what's going to happen. That's how I see this playing out.
I have a question for you. In The Big Short, like, what's one story you wish would have been included, and what's one thing that maybe they didn't get exactly right that you kind of want to tell the history of today?
Let's see. I'm sorry. Ask the first question again.
What's one thing they may have left out that you wish would have been included? Maybe in your analysis of trades, or
there's a good story. I'll tell you a story that I thought was a good story, but it wasn't in the movie. It was sort of in the movie, but they did it differently. I wish they had done it exactly as it happened. So on Lehman went bankrupt Sunday, I think it was September 14th. And then on Tuesday, AIG collapsed. And on Friday, I was at a conference meeting potential investors, and basically the world was imploding.
Mm-hmm.
I mean, literally bonds weren't trading. My trader and partner, Danny Moses, was having an anxiety attack. And I got a call from my partners to say, Danny's having an anxiety attack. We're getting out of here. And I told him, go to St. Patrick's Cathedral. We'll sit on the steps. So I turned to the investors who I was in front of. I said, listen, there's too much crap going on in this world. I got to go. And I left. And we were sitting on the steps of St. Patrick's. It was a gorgeous day. And I think I turned to one of my partners and I said, these poor people, they have absolutely no idea the calamity that's about to unfold on top of their heads. So I wish that had been in the movie, but it wasn't in the movie. And which part did they get wrong was your question?
Yes.
The movie pretty much got it all right. I mean,
Okay.
I was kind of that crazy back then, and that angry, and I thought that was captured really well. And you know, he simplified certain things because they had to be simplified, but I think the movie really captured that period of my life pretty accurately.
Talking about The Big Short, during that time frame, was it a one aha moment where everything came together for you, where you was like, this thing is about to fall apart, or did it happen over the course of time?
Combination of both. So, you know, we were short subprime paper, which is all these securities, loans that are securitized, subprime loans. And there's a database. Basically, every single subprime or every single securitization does a data dump every month. It comes out of kind of like over a 2-day period during the middle of the month, where every securitization will report every single credit statistic, 30-day, 60-day, 90-day delinquencies, real estate owned, losses, you name it, whatever possible credit statistic there is, you got it reported. It's the most granular consumer loan data in the world. And that was like the Bible. And every month we would look at, we would be very religious, and we would read our Bible. And so every month the data kept getting a lot worse, except for a very short period of time in the spring of 2007, because people got tax refunds. But other than that, the data just kept getting worse and worse and worse until it was very clear that this is not good. And then I guess the moment when I knew it was like, okay, this is it in terms of the subprime mortgage part was it was August of 2007, and my family and I were vacationing on the island of Nantucket, and we usually go there for 2 weeks. We rent a little house, and in the second week, we were the mortgage market was imploding in that time. And I remember one day in the second week, we were walking, and my wife turns to me and she says, "Stephen, where are all the men?" And I said, "Oh, they went back to New York to watch The End." That's when I knew it was over. But by the way, the one thing that's never usually said, the financial crisis, as far as I was concerned, was baked by August 2007. Now, the crisis itself actually took place in the fall of 2008. But by then, there was nothing any of these companies, anything Wall Street could have done to stop it, because they owned all this stuff.
Yeah.
As you're talking, it feels like there's optimism. Obviously, what's going on with tariffs is causing uncertainty in the market now. But at some point, when there's some certainty around it or some clarity or deals are made, the outlook for the economy, including the housing market, right? Because we've seen potential credit card debt getting higher. We already know what our national debt is. What are your outlook for the economy in the next year or so?
I mean, look, if there was no tariff thing, I'd be very bullish. You know, credit quality, you know, the banks all just reported credit quality was fine.
Yeah.
It was very stable. You know, people like to point out to the increase in credit card debt. It's just an absolute number. That to me, that's not important. The thing to watch is the actual credit statistics. And as long as delinquencies they're low, they're flattish, I don't find there's any cause for concern. If a problem starts to emerge, you will see it in that data.
What is the percentage of delinquency that it would raise alarm for you?
Good question.
That's a good question. I mean, it's not an absolute level. I would have to see a pretty steady increase month to month. That's when you start to see it. You know, what are we? We're in April. So if May is worse than April and June is worse than May, this is what happened in 2007. Every month it just got worse.
Yeah.
Then you know there's a problem. If it's just seasonal stuff and it's just bouncing around, it's nothing to worry about.
30-year treasuries haven't made a new high since 2020. What the hell is going on with that bond market? I've asked every investor and trader that I know. I don't want to be an alarmist, but do you think we'll have a turnaround at some point? And why do you think we haven't hit a high? in almost 5 years?
Look, I think there's short-term trading and there's long-term trading. I think right now you're dealing with very short-term stuff where people are just de-risking, and so they're selling. They're probably, on the stock side, people are selling some stocks, and on the bond side, they're selling long-term treasuries, and they're probably maybe they're buying short-term treasuries or something else. Tomorrow, if they announce some sort of deal, it would all reverse. Do I think there's a problem? Do I think China is going to sell all of its long-term treasuries? I mean, they could. Where would they put their money?
Yeah.
That's sort of the problem. If you're big money, the Chinese government, the Norwegian sovereign wealth
fund,
some enormous pension fund. And you need to you can only invest so much money in stocks when you're that big, because it's not liquid enough.
Yeah.
You need to buy bonds. That's where big money parks its money. And if you're going to buy anything of duration, you're going to buy treasuries until there's an alternative. So what's happened to our treasuries of late, I think, is short-term de-risking that people are doing.
Okay.
Well, Steve, thank you for your time. Great conversation. And
absolutely.
Your podcast is out now, right?
Yes, it's called the Eisman Playbook. A new one just dropped today, discussing why the German economy doesn't grow anymore.
That's a good one. Okay.
Yeah, them automotives.
It's based on it's an interview with a guy who wrote a book, the title of which is Kaput. One of the best titles I ever heard. I got to get this guy on my show, because anybody who comes with such a gutsy title deserves to be interviewed.
For sure.
Fair warning.
Well, thank you. Thank you again. Appreciate your time.
Thank you.
Thank you so much. I appreciate you.
There you have it, ladies and gentlemen.
Amazing conversation with the legend, an icon.
That's a legend, man.
Yes.
Learned a lot, man.
For sure.
I think the most important thing I took from it was his level of optimism. He's called doomsday before, and he doesn't see a forecast of it in the near future. So
yeah,
that was good news.
Cautiously optimistic.
Yeah.
Cautiously optimistic. Because even if you listen to what he said about China, he's like, everybody's gonna work their deals out, and then the U.S. and China is gonna be at it for
a long time.
That's not encouraging.
Yeah, but that GDP, and we spoke about it the first day about the importance of the GDP and our level. That little tidbit he threw in, and it says 19, but they ship things off to other countries.
It's the nuance in the numbers. I know people say men lie, numbers don't. There's some line in numbers for sure.
I hadn't even thought of it like that, but that makes sense. That makes a lot of sense. And I wonder how many other countries they're actually using to offset some of those tariffs. That would be interesting to find out. Not that we would, but it would be interesting.
Yeah.
So
go ahead.
No, go ahead,
Rashad.
No, go ahead.
No, go ahead, brother.
Well, I was going to talk about NVIDIA. I'll switch topics. So if you want to follow up with what he said.
Oh, okay. I think for everyone who's in love with the lore of the Big Short, that being hyper bullish is the new Big Short trade. I think he expressed that well tonight, whether it's, he's not pro Bitcoin, but if you are in the Bitcoin community, you think that has value, stay long that. If you think tech is going to work out, to stay bullish on that. I think the desire to catch the top of a market and all those factors that led to the world almost falling apart, they're not here now, despite how bad the tariff situation may be. So I would be remiss if I didn't bring that up, because everyone wants to recreate that. Even with Michael Burry, his return was 500%. Not knocking that, because that's an amazing return, especially for that time. But it's a lot easier to get 500% of your portfolio to the upside holding for a 3 or 4 year period if you layer your investments and trades right.
Yeah. And you finally got an answer on your bond market.
Finally, I want the off the cuff at the bar answer though. I need the 08 answer. When he was in the conference, yeah. So,
okay, NVIDIA talked about the $5 billion hit. So he said that AI is still in the beginning stages. Some people think that AI is the bubble is about to pop. So NVIDIA, slow down as far as the stock price is concerned for sure.
Yep.
What does this say?
It's never going to go back to 95 and 80. I'm telling 89 is coming soon. I think going back to his de-risking part or conversation, I think some people are just taking risk off the table. But with Nvidia, even in lieu of that $5 billion penalty I was telling Stock Club, same with Amazon. If you're hedging, like we talk about hedging a portfolio, we don't often talk about hedging our investment with other countries. I think Nvidia and Amazon has done the best. It's almost impossible for them to lose. Not saying that Nvidia is getting the Hopper chips there intentionally, et cetera, right? But if they are there, and then we're getting DeepSeek and Manus, thank you for the invitation, but I will not be uploading any information on my IP or my internet browser anytime soon. How can you win if you have the two biggest countries vying for your interest? Nvidia is like the pretty girl, the new pretty girl at the school that everybody wants the attention of. So the days of getting a 300-400% return in 1 year, I think, may be over. But it's still one of the best companies on earth, and I think they primed or hedged their position well enough in the market and amongst both countries that matter the most to make sure that they do well either way.
Yeah, they are primed to dominate. They have dominated. What we have seen here, I mean, almost from a year to date, is consolidation, which is good
For sure.
out of the stock. If you look at where it was in April, literally April 21st of last year, it was at 95.44.
Yep.
And we hit 95.44 today. And so that in terms of, if you look at a long scale scope of this is consolidation, which usually means, all right, we're going to settle here. We're going to have some sellers. People are going to take profit, but there's usually an upside, especially when you're inside of a space that you are the dominant force. 87% of GPUs are coming from NVIDIA. They've already showed us the roadmap for it. If he's saying we're at the beginning stages of AI, which a lot of people seem to think we are, then this is where you park the car at right here, and you just wait and you get it at a good price and you hold it long term. It's primed. It's primed, and we'll see over the next few weeks what the first quarter earnings will be looking like.
Yeah.
But like I said, we were at GTC. We saw what the outlook looks like for the future. We saw who they're partnering with.
Yep.
And there, I mean, we've said it before. I'm gonna say it again. There's not a number two. There really isn't. And until that competitor can crack a dent,
it's not there.
They've got free reign in terms of AI compute. So yeah. I love them here. I've loved them when they were at 127 pre-split. Yeah. And I loved them all the way up to 1100. So 95. I mean, this is no-brainers.
I hate to do the comparison thing because when I did it with Square, I got in trouble. Okay. But NVIDIA's dominance right now is comparable to Microsoft run in the 90s. Like, you have people that are orbiting for that number one spot, but they have no close competitors. Market cap is 2.3 trillion. Gross margin 75%. Net margin is 55.85% profit for $1 trillion company. Most small businesses don't have 55% net margin,
and that's an $800 billion decrease from where it was.
Yes. Return on equity 119%. Just like if the sliders were on 2K, it would be 105. Like, it would go over. Yeah. So amazing company. So, and also too, like, perfect hedge for both continents as well. Perfect hedge.
Yeah, we're gonna work with both. We're gonna work with both.
5.5 to bring in 555 billion is a good risk to reward ratio.
So Trump's approval rating on the economy dropped to the lowest of his presidential career right now. Will this matter, or will he continue to do what Trump does and, forge his way through? I think that approval ratings are not too much of a concern for him. He only has one more term left, unless he tries to run for a third term. So I don't think that he's too concerned about approval ratings.
Well, what do you think? You running for president in 28, so
he's isolated himself as far as his inner circle And I think that he has some level of he's out of touch with reality. I don't want to say dementia because I'm not sure if he actually has full-blown dementia, but I do think that he has some level of narcissism that has.
We can't put that word on everybody because they do it to us.
Well, I think that he definitely.
Or just me and you, Rashad. Just really me and you.
Embodies. He embodies.
Thanks for the clarity.
He embodies some form of that. So I don't think that. I think he's always going to find a way to blame somebody else.
Very true.
Or point the finger, or say it's not true, or say it's fake news, or have his own studies done that show different support, or go places where he knows he's going to be championed. So, and then he has a strong support base no matter what, that I think is going to support him no matter what happens. And I think that he has a theory in his brain that what he's doing is correct.
Mm-hmm.
That, he's fighting the good fight. And I don't think that he's going to pivot direction off of that.
Yeah, I agree. Same with Elon. I think right ideas. Like I think the autonomous vehicle, robotic idea is a great idea. Poor execution. Same with the tariffs, the negotiation tactic. Right idea on paper. I think the execution was just incredibly sloppy. So,
yeah, I like what you said. Oh, go ahead. You wasn't finished?
No, go ahead.
I like what you said. I think that part about who will I put the blame on next? It's like
Obama.
Yeah, the buck. I mean, you can keep bringing up Joe Biden. You can keep bringing up like you've already won that race. Now it's the Fed chair. It's just about when I have this idea and I throw it out there and it doesn't work. Rather than saying like this was self-inflicted, rather than saying that we caused this, rather than saying like hey, I might have made a mistake here. Who can I point this at now? Like approval ratings don't matter. You can approve it or not. He's going to be the president. So it could be a 2% approval rating. Who cares?
That would be insane. But when it was high, he cared about it.
And I thought
he's still. It's not going to change the fact that he's still the president.
And I don't think he cares about the stock market either. So I do think. Well, he hasn't done anything.
He said it's doing great.
He hasn't done anything as of yet. Even when he did the reversal, that was more so for bonds than stocks.
For sure.
So I don't think that. Well, of course, everybody's scared about the stock market. I don't think that that's a major deterrent for him. Like,
you're right.
The stock market is flat for 2 years. I don't think that.
He won't give a damn.
He's not gonna reverse course just because the stock market is flat for 2 years. So, great buying opportunity during down markets for sure, but this could be a prolonged situation.
Yeah, I think the era of maybe like a quick turnaround, like COVID, because all the stimulus money that was printed. I don't think it reminds me a little bit of like that when Ballmer was CEO of Microsoft, where things would just be flat for a few years. And then now you get a chance to build your base, and it may not feel good while the market is in this contraction period, but it's interesting. Of all of you who kept asking me, should I buy inverse ETF? No, I don't think most have the skill set to pull that off. And the market isn't down enough to do so. So be careful of that. Like maybe if the VIX gets to like $12.78, maybe then, but you have to exit when the VIX gets back up to 25 or 47.
Yeah,
most people shouldn't do that.
You got to be precise and you got to be accurate and you got to know what you're doing if you're going to be doing inverse. Yeah, man, it's interesting. Even every time we talk to somebody, economist or strategist from the world of business, it's the same thing. It's like, yo, if we didn't have these tariffs, we'd be doing pretty great.
Yeah, Nvidia would be off to the moon. I mean, because especially at that GTC, just the things they announced, Tesla wouldn't be down as much. But the thing about this tariff situation or these kind of like economic situations, it makes you look at the numbers a lot harder in the core business. And there was a lot of businesses that was floating along because the economy is doing well. And we get to really see who's great and who's not.
Yeah. So everything will be adjusted, right? So future guidance will be adjusted because revenue will come down. Everything will. That part that he said about it, we're going to be in the long game with China. That's going to be interesting because it felt like, and it still feels that way. Like he'll create a scenario, as he said, as Steve said, he loves chaos. Like most people don't like. He loves chaos. because it's that superhero mentality, or that maybe I guess you can chalk it up to the narcissism. I can come save the day. I have the solution to save the day. And the deeper we get into this situation, I don't know if there's the Superman cape for this. This might not be the save the day tactic that I think in his mind he has planned.
It's like Thanos.
Yeah.
But in the meantime, I was put it on Twitter last week, but man, shout out to the Visa CEO who we met. Visa smoking right now. On fire. Good hedge for this market.
Yeah.
I would love for you to come on the show, Mr. Ryan.
Please.
So if anybody knows him, you know a company's gonna do it well when you're like, oh, what you think of the economy? He's like, oh, I don't know. I'm like, all the data points you got, you know what the economy's gonna do. Humility in the answer. I'm like, oh yeah, y'all finna go to the moon. To the moon. He ain't trying to give no guidance stuff or nothing. Oh, great. Nice to meet you guys. See you later. I said, oh, he cooking.
Yeah,
Visa.
crazy. Yeah. NVIDIA. So I'm just reading this. The former CEO of Intel, Pat Gelsinger, said that in order to dethrone the king, you got to be 10 times better. They've created such a competitive mode that it's almost an unfair advantage. And this is the guy who was trying to compete at one point.
And the crazy part, Only the Paranoid Survive was a book by the CEO of Intel back in the day. It's a great business book.
Yeah.
10
times better.
Have to be. I mean, we've lived about that forever. Shout out to Michael B. Jordan, Kugler. Rashad, I saw your poll. Ooh, I said, damn, deal split. Ooh, let's talk about the splits.
20, yeah. Shout out to them.
But it's a great point. You do have to be 10 times better. And even then, like we're 10 times better than most analysts and funds. And boy, so math to 30 exit.
Are Google's best days behind them?
Let's see what stance I want to take on this.
All right, shout out to the team at Google. Had a nice onboarding call with them earlier this week. This is an interesting time as they are in court facing a potential,
which I think is unfair. Yeah, which I'm not saying is because of the relationship, but
yeah.
Why are you steady to the government with the FTC? Well, never mind. But I think it's unfair to continue to have this search argument, right? Because the government, you're smarter than me, so I'd be remiss if I would act like I'm smarter than you. I'm so sorry.
Thank you.
Why in a landscape of AI, when their lead is decaying with AI, why are you trying to break up the search business when the real focus should be on who has a monopoly on AI by country?
Well, that's part of it. So the AI piece is a part of it. So they are being accused of illegally stifling competition by paying the makers of web browsers and phones to set Google as their default search engine. So when you buy your iPhone, when you search, it's Google. So what they're saying is if I have that user base, right, they have now mixed Gemini inside the search.
Okay.
And so automatically your search becomes Gemini, which does apparently hurts some companies. So a federal judge ruled last week that the company held a monopoly over some of the tools that websites use to sell open ad space. And so there's that part of it too. And then if you look at the number one web browser, right? We grew up in an era where it was like you use Safari.
Yeah.
Chrome has now surpassed that by millions, if not billions of people. And so there's that piece. The interesting part is I read some of the court documents. They didn't really touch on YouTube as much.
No.
Which is its own conglomerate and a big part of their core business. But that if they break up search, then that the answer to the question would be it's likely. It's likely.
Okay. Google has
behind them.
Yeah, Google has 89% of the global search market, but ChatGPT, including Microsoft Copilot, has 74% of the generative AI chatbot market. So are they then going to go after Microsoft and OpenAI next?
Mm-hmm.
I would think that the search market is a dying, not in terms of relevancy, but Rashad, to answer your question, do I think Google's best days are behind them? No. And that's not because of the relationship. I think people are overhyping AI killing off their business. Do I think culturally they could have done some things better and could have kept some of the things they innovated? For sure. But to call it dead would be a mistake.
Not dead. This
no,
is
nowhere
like
near
a big dog playing big dog, right? They want them to stop making payments to phone makers like Apple to ensure that people have an option to have a search engine. But if they have the capital to do it, they're going to do it. The number one branded phone for sure is Apple. So if I can pay them to be the search engine for that phone, I'm going to pay them. If it was a Trio 10 years, they would have paid. Like, you pay it because you understand that makes good business for you.
And it's a superior product. That's the one good lesson you need to bring. Going back to that 10x better point, like, make the product so good that you have to get these monopoly charges. Safari's, shout out to Apple, I know y'all tired of me, but Safari's search engine browser isn't nowhere near Google's. Not in the same universe.
Yeah.
So, yeah. But no, Google's nowhere near that.
Yeah. And you know what? I think they'll come out victorious in this one.
Yeah, I hope so. Evan Spiegel, you should have sold that to Zuckerberg, though, while we talking about that. Boy, you call the funeral home yourself. Get your little rent, get your suit together at $7.50. Remember when it went to 83 and everyone was like, you guys don't know social, you're out of touch. Okay.
Yeah.
Hey, listen, the government's gonna ask Meta to buy Snapchat because it is in the ground.
Stay away.
Keep
the family away. But DeepMind, I mean, you sent that clip, and if anybody watched 60 Minutes, DeepMind, some of the innovation that they have in real time with AI. I mean, that's incredible. It looks like, again, if they package the right product correctly, if they can market it correctly, they have the advantage because they have the brilliance inside of the company already.
Yeah. Google reminds me of like Popovich. Like, it's a lot of fruit that came off of that tree. They may not have directly benefited from it, but yeah, they were in the lead on thinking of doing this kind of model maybe 10 to 15 years ago, but they just didn't keep it all in the house. So, but no, Google isn't dead.
You learn.
For sure. Adoku, you almost had one last night, my boy, but Steph came through.
My boy, different, man.
For real. I'm like,
all right, y'all.
Real
Detroit, Michigan. We are in your city tomorrow.
Yep.
Yes.
2 tickets left. Go to youdeservetoberich.book.com. Get your tickets. New Haven, Connecticut will be in New Haven on May 2nd for the book. It's May 3rd.
May 3rd.
For the book tour.
Saturday.
You breaking out the Cardis in Detroit?
Oh, yeah, for sure.
I think I'm supposed to pick up some.
Definitely.
Yeah. I have none. And I said, if I ever do it, I got to do it.
You got to do it right
place in the right city.
Gotcha.
But they said they're going to put me in contact with some people.
Gotcha. I feel like the old days. Just fire information, no gossip. You know what I mean?
Just do what we can, man.
Comments, yeah.
Big earnings week before we get out of here. We talked about Tesla. They report tomorrow after close. Boeing will be reporting on Wednesday. Chipotle on Wednesday. Vertev on Wednesday. Who else we got here? Texas Instruments. We talked about them. Land Research.
Good.
Intel on Thursday afternoon. The company we just spoke about, Google will be reporting as well. Celestica, T-Mobile. So some of the heavy hitters are going to be reporting. American Airlines, PepsiCo. So a big week. We'll see what happens. Yeah.
I mean, actually, Intel is at a generational buy level. I still wouldn't touch it, but we're almost 1804. But
and your favorite athleisure brand will be reporting.
Lulu?
Skechers.
Oh, cap. Almost got Nike wiped down too. Mark Parker, whoever up there.
No, they got Joel Embiid, and then crazy. I don't know what happened after. Like,
injuries.
It's like, what? Should have known that.
Skechers got a couple of.
Who else they got? Tom Brady at one point was Skechers.
That's crazy. They're about to have a hard time too, though. Yeah, I can see them falling to like $28. The tariff thing is going to hurt a lot of business. Like, I get the course correction, and sometimes you got to feel pain to get to the promised land, but this is going to hurt a lot of companies in combination with private equity doing what they're doing. Y'all go research that Toys R Us story.
That's
it's tough.
Julius Randle, what the hell is he thinking? He's the other one.
Oh,
no, he's a Skechers athlete.
I remember they threw the bag at him.
Shipped him out to Minnesota for that.
Shout out to Julius.
We don't wear Skechers in New York, bro.
Carl Anthony cooking.
See?
Jalen cooking.
More appropriate.
Yeah. Josh Hart. Ooh, New York looking good, yo.
All right, y'all. It's been real.
It's been real. It's been real.
Rashad ready to go to Ghana on y'all. Look.
We coming home. No, we coming home. We coming home.
World traveler.
Just wait for it.
Back then, I was on the world tour.
Just wait for it.
Text me them dates too.
I got you.
You might
Shaka, I'm gonna be right at the jiu-jitsu. I saw my boy doing push-ups. Y'all think I don't got it? I said Shaka ready to knock somebody out.
Yo, I'm telling you, you walk around the continent with Shaka, it's different, man. This dude is internationally known for sure.
For sure.
Yeah.
Shaka, man.
I got
it to a continent near you soon. Not just Africa.
Text me, Rashad.
Not just Africa.
I'm gonna get right on Expedia.
Cool. The world is big, man. You got to explore it. You got to explore it. That's a major key in life.
Stay tuned.
All right, ladies and gentlemen.
Love is love, man.
Blackout on Wednesday and Earn Your Leisure on Thursday.
Yes. We'll see y'all
Friday on Wednesday.
Be good to each other. Pray over each other. Condolences to again, some of our good friends have lost family members. So condolences. Thoughts and prayers go out to y'all. Reach out to your people. And love is love. We'll see y'all. Peace.